Hi, my name's Brian Kem. I'm with Frugal Fortunes, and today I'm going to be discussing the auto industry. More specifically, there's been a huge run-up in auto loan debt. This has led to a bubble, and with any bubble or crisis comes opportunity. I'll get to that in a minute, but first I would really appreciate it if you tap the like button down below. It means a great deal to me. All right, so first I want to show you a chart. I'm going to go ahead and put it up on the screen. The blue line shows that total auto loans have gone from about 700 billion to 1.16 trillion dollars. The other line in red shows interest rates. As interest rates have decreased, it's made cars or car loans more affordable for many Americans. On top of that, many Americans have bought above their means. Car financing units have made it very easy for consumers to buy cars. For example, Ford last year reported $46 billion in its total loan portfolio. A lot of times they'll offer 0% financing for 36 months. But with a frugal mind, we already know that incentive is already baked into the price. Now, interest rates have been climbing over the last few years, and this was putting downward pressure on new car sales. This second chart that I have for you, it shows what I just talked about. Federal funds rate has been climbing over the last few years. It went from 0 in 2015 to about 2.4% at the start of 2019, and now it's kind of leveled off. The Federal Reserve stopped hiking interest rates, but the damage is already done. New car buyers are paying 6.19% for a 5-year loan today, and about a year ago, it was only 4.99%. Average new lease payments have climbed from $436 in Q1 2018 to $457 in Q1 of 2019. That's not a big bump, but still, there's lots of Americans that are struggling to make ends meet, and this is putting pressure on them, and it's leading to defaults. This pay bump is more drastic in the subprime loan market. Subprime and deep subprime make up just over 20% of the total auto loans outstanding. They've gone up $22 and $43 respectively in a short amount of time. Once again, that puts a lot of stress on consumers. But what's the silver lining here? Well, as we see this bubble expanding, we know there's going to be a contraction, more defaults are coming, and this is going to lead to a great opportunity. I expect the price of used cars to drop over the next few years. So if you're in the market to buy a new car and it's not urgent, it might pay to wait. At the start of 2019, auction volume dropped by 10.4%. Already we're starting to see downward pressure on used car sales, and the auto industry as a whole is undergoing a lot of big changes, a lot that I'm very excited about. Part of the American dream used to be buying your own home, buying your own car, ownership, although times are a-changing. The sharing economy is taking its toll. With easy sharing apps like Uber, a lot of Americans are starting to opt out of buying an expensive car. Cars are the second most expensive asset that you might buy, although they sit around for 95% of their life in garages and parking lots, not doing anything. So the sharing economy helps us to be more effective with some of the assets that we own or now share. The auto industry is just set for a lot of disruption, and one other area that's starting to be disrupted is auto dealerships. Auto dealerships are protected by politicians. Politicians spend a great deal of money making sure that consumers have to go through dealerships to buy them. Although as a consumer, this is terrible. It can add $1,000 plus to the price tag of a new car. Although thanks to innovators like Elon Musk and Tesla, they're fighting those old rules, old consumer unfriendly rules. They're trying to push direct sales from manufacturers to consumers. As that change comes, that's a benefit to the consumer, and it should help lower prices. Overall, the future looks bright for transportation. I'm really excited about autonomous vehicles that are starting to hit the road. They're a ways off, but it's just another area where consumers will benefit. In fact, I've done research over 5 years on autonomous vehicles, and I'm going to link down below to 25 pros and cons of a driverless future. So you might want to check that out. I really appreciate that you stopped by today. Once again, if you could hit the like button, I'd really appreciate it. I'll be putting out more research soon. I look forward to seeing you next time. Bye.